Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to the calculation of total asset turnover and return on equity. We're going to look at some relationships between ratios that are going to be a little bit more complex in order to work these calculations. Get ready to take a chance with Corporate Finance. Here we are in Excel. We have the information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. We're going to start off with the gross profit margin percent and the return on assets, and we're going to use those to calculate the total asset turnover. Now, if you don't just have this relationship memorized, then you can kind of think this out. You can kind of work this out. And if you're doing this with like a book problem type of activity, then you're going to say, okay, they gave me these two numbers. Usually those are the two numbers that I would calculate. Normally I know what the formula is for these two numbers, or that's what I'm going to memorize if I don't. And then, but they gave me those two numbers. Now I'm going to need to take that information to calculate the total asset turnover. So let's just think about these three ratios in terms of what they include, what is in them. So let's do that over here. We got the return on assets is going to be the net income divided by assets. Remember, whenever you're looking at this relationship, you're going to say, okay, there's an income statement account and a balance sheet account. So this bottom number, they could say average assets or something like that because we have that timing kind of issue. But in general, we're going to say it's going to be the net income over the assets. And remember that whole average type of thing is an attempt to find a representative asset number over that time frame. But in any case, we're going to say net income over assets. We know the gross profit margin then is going to be net income over sales. So that's the gross profit margin. Those are both income statement accounts. We don't have this issue of income statement balance sheet account, or so no average kind of thing that takes place there. And then we know that what we're trying to find is the asset turnover, which is sales or revenue divided by assets, where once again we have an income statement account and a balance sheet account. So you might think of the assets as net or as average assets or something like that. It just depends on the context of the calculation. We're going to take sales divided by assets. So then if we look at those relationships, I'm going to say, okay, we want to take these two items and we want to use them to calculate this item. How are we going to do that? We got net income, assets, and then sales. And so we want these sales and assets to be like this way, sales and assets. So what can we do? We could take this second one. If we could invert this somehow, then these two things would be related, right? And how can we do that? We can divide. We can just divide this. So I could say, all right, well, let's just divide it. The way we would divide it is we would take the net income over assets divided by net income over sales. How do you do division with these fractions? You take the reciprocal of the second number. So that would leave us with net income over assets times sales over net income. So we convert the division problem to a multiplication problem, taking the reciprocal of the second number. That leaves us then with canceling out net income and net income, leaving us with simply sales over assets. And that's going to be that's the formula for asset turnover. So that means that we can take, how do we get the asset turnover if we know return on assets and gross profit margin? We could take the return on assets and divide it by the gross profit margin. So we already know these numbers, so we're going to say the relationship between these then would be, we're going to take the return on assets, which is equal to, we're going to pick up that 16.5. I'm going to then make it a percent, home tab numbers percent. We'll add a couple decimals to it. Then we're going to be picking up the gross profit margin percent, and that's going to be equal to the 5.7. Going to format that by going to the home tab numbers percent, add a couple decimals there. Then we're going to be picking up that's going to give us the total asset turnover. So the total asset turnover then will be equal to the 16.5% divided by the 5.7%. Total asset turnover not typically represented as a percent, therefore we'll go to the home tab numbers and just add some decimals. Again, it could go on a bit. We're gonna take it out to two places, which is often the case. We're gonna go home tab, font group, double underline our number here, and then we will underline our number up top. So it's good to understand and kind of memorize this relationship, but you also kind of want to understand it. And the way you understand it is you look at the ratios. You break out the ratios and then start to work with those to see how this relationship will work. Let's take a look at the second one. If debt to total asset ratio is 30%, what would return on equity be? So, and the information up top still applies. Okay, so we're going to do the same thing. We're going to say, okay, they gave us this number, we know this number, and we know this now, we know the turnover here. So, how can we take some of these numbers to figure out what we need? Well, they gave us this 30%. So what's going to be the calculation that's going to be the debt to total assets. So we know that that's going to be a liability over the assets, debt to total assets. So we have that, and we're trying to get to this number over here, which is return on equity, which has net income over equity. So we're looking for net income over equity. So what we have here is liabilities. If we have this amount, we're looking for equity. So is there some way I can use this ratio to figure out a ratio with equity in it, you might say? We can, because we can use the accounting equation. We can say, okay, assets equal liabilities plus equity. So that means if we were to say that if we take assets over liabilities, then 100% minus the assets over liabilities has got to equal the equity over liabilities. So because liabilities equals assets plus equity. So in other words, so if we work this out, we're going to say, okay, well, if liabilities is over equity, if we know that, we can actually figure out by taking a 100% minus that number to pick up the equity to assets. So then we can figure out then the ratio of equity to assets. That ratio is something that we can then know. So if we have that, and then we can also have so now we've got equity compared to assets, and we've got net income to equity, which is where we want to go. So we're looking for basically the net income number, and we know that the return on assets that we have been given over here, return on assets at that 16.5 is net income over assets. So that's going to be the net income over the assets. So then if I look at these two, I'm going to say, all right, now I've got the equity, I've got the net income and assets. What I would like to do is kind of invert these two and get the equity on the bottom and cancel out the assets, right? So what we can then do is we can say, okay, well, let's take the return on assets, which is going to be these items, net income over assets, and divide it by return on equity, which is going to be these items. By doing so, we can then flip the second item's sign, or reciprocal. We'll take the reciprocal, converting it to multiplication, as we will do when we divide, fractions. So now we've got net income over assets times assets over equity. And we can cancel out then the assets, and we're left with net income over equity. We're left with net income over equity, which is what we want. So what we want to do is be able to get to the return on assets, and we want to be able to divide that by the equity to assets. In order to do that, we first got to find out what the equity to assets are by using the debt to total assets. Okay. So let's do this. We're going to say, all right, let's take, what we're going to do is we're going to take 1 or 100%, let's make it a percent, 100% minus the debt to asset ratio that was given. So the debt to asset ratio is 30%. So let's make that a percent. Home tab, numbers, making that a percent. So if the debt to total assets is 30%, because of the accounting equation, assets equal liabilities plus equity. So if liabilities to assets is 30%, then 100 minus 30%'s got to be the equity to the assets. So I'm going to then say, okay, let's underline this, and we're going to say that's going to give us the equity to assets. This will equal the 100% minus the 30%, making that a percent. Home tab font numbers percent. So there is our 70%. Then we're going to be picking up the return on assets. So the return on assets, which is going to be equal to the 16.5. I'm going to make that home tab numbers percent. Add a decimal to that one. And now what we want to do is we want to take the return on assets. So I'm going to pick this one up divided by this one. So the bottom number divided by the top number is going to be the return on equity. So we'll say, all right, return on equity then is going to be equal to this number divided by this number. Let's make that a percent. Home tab numbers percent. We'll add some decimals to it. Let's double underline it. Home tab font, double underline. Then we'll put an underline up top here as well. So there we have that. And then the last one says if the debt to assets ratio decreased to 20%, then what do we have? So we're going to say, all right, same calculation. We've got 100%, but now we have the debt to equity ratio has gone down to 20%. Let's make these all percents at the same time. Home tab, number group percent. We'll add some decimals to it. And then we're going to say, all right, so if I subtract these two, this is going to be 100 minus the 20. Let's put an underline here, home tab font underline. Let's say this is going to be equal to the equity to assets. And then we're giving the return on assets, which we're assuming is the same, to 16.5, home tab font underline. And then we're going to divide this out. This equals the 16.5 divided by now the 80%. That's going to give us our 20.63. So 20.63, and that's going to be equal to our return on equity. You can double underline that if we so choose. Double underline that one.